Did you know that Nike is facing an unprecedented sales decline? What does this mean for the future of one of the world's most iconic brands? Stay tuned as we dive deep into the challenges Nike must overcome. Don't forget to like, subscribe, and drop your thoughts in the comments below, because this story is one you won't want to miss. Nike's recent guidance is sending shockwaves through the market, revealing a troubling trend for the brand. They're projecting a double-digit drop in sales this fiscal quarter, with their finance chief, Matt Friend, confirming a decline at the low end of the mid-teens range. This is significantly worse than analysts had predicted, who were expecting a decline of just over 11%. This stark disconnect between corporate optimism and the harsh realities of the global market raises serious questions. While Friend points to external factors like geopolitical tensions, new tariffs, and fickle consumer confidence, these seem to gloss over deeper, systemic issues that have taken hold in the global economy. Despite beating earnings expectations in the last quarter, the broader picture remains concerning. Nike's net income has dropped by a massive 32% from the previous year, with sales in key markets, especially China, plummeting by 17%. Nike's struggle to maintain its brand identity in an increasingly tough economic environment is becoming more evident, with CEO Elliott Hill acknowledging the fierce competition the brand faces. It's a stark reminder of how quickly market dominance can fade. Hill's recent claims of progress raise important questions. While Nike continues to attract top-tier partnerships, one must ask, how long will this last while they are still navigating the inequalities their business model perpetuates? This pattern isn't new. It calls to mind the fall of major apparel brands like Abercrombie in the early 2000s when they failed to keep up with the digital age. Despite Hill's insistence on pushing innovation, Nike faces a tough road ahead with tariffs still looming from the Trump administration. These tariffs could squeeze their margins, and the only option to stay afloat might be to raise prices. Yet, such a move risks alienating consumers already feeling the financial strain. This raises another crucial question. Where's the commitment to creating a resilient economy, one that values the workers who make these products instead of just focusing on shareholder profit? As consumer confidence dips, discretionary spending, especially on items like new apparel, is one of the first things to go. This spells trouble for a sector that's already reeling from post-pandemic shifts. On top of all this, rumors of Nike's partnership with Kim Kardashian's schemes have emerged. Is this a genuine effort to connect with underserved communities, or just a clever marketing ploy to win back disillusioned customers? If Nike can overcome these hurdles, tapping into the loyalty of female athletes and everyday consumers, their strategy could set industry-wide trends. But can they really deliver on these promises amidst such significant challenges? As consumer markets falter and uncertainty looms, the key question is, can Nike reclaim the trust of a public that's becoming more critical of corporate actions? Or will their efforts be nothing more than a temporary fix in a system rife with deeper inequalities? In my opinion, Nike's struggles highlight broader issues within the retail industry, where economic instability impacts marginalized communities the hardest. It's striking that while companies like Nike wrestle with declining sales and rising costs, the consumers they rely on are often the first to suffer the consequences of these economic shifts. This situation forces us to reconsider the power dynamics that prioritize profits over people. As we watch these developments unfold, we're left with one big question. How much longer can we allow the elite to control the fate of everyday people? Let me know your thoughts in the comments below.